Hello and welcome. Before we get started today, if you rely on Social Security, disability, a pension, or any kind of monthly benefit, I strongly recommend subscribing to this channel. We focus on clear, honest explanations of changes that affect your money, your bank account, and your peace of mind. Subscribing helps you stay informed without having to dig through confusing government language or misleading headlines, and it helps us reach more people who truly need this information. Today's topic is extremely important, and it's one that many people don't realize affects them until a payment is delayed, reduced, or temporarily frozen. New banking rules are touching Social Security and disability payments, and these changes are also connected to stimulus discussions, pension deposits, and how benefits move through the financial system. This does not mean that Social Security is ending, and it does not mean that your benefits are being taken away, but it does mean that how money is processed, verified, and protected has changed in ways that can affect real people, especially seniors and people with disabilities. Over the past year, banks, the federal government, and payment processors have made updates to rules designed to prevent fraud, identity theft, and improper payments. While these goals are understandable, the reality is that new rules often create confusion, delays, and stress for people who depend on steady monthly income. Many beneficiaries have already experienced unexpected bank holds, extra identity checks, or letters asking them to confirm information they thought was already on file. At the same time, conversations about new stimulus payments, state relief programs, and pension adjustments are happening across the country. Even when no new stimulus has been officially approved, banks are preparing their systems for potential deposits, which triggers additional scrutiny on accounts that receive government funds. That means even rumours or proposals can lead to changes in how accounts are monitored. In this video, we're going to walk through what these new banking rules are, why they exist, how they affect Social Security, SSDI, SSI, pensions, and potential stimulus payments, and most importantly, what you can do to protect yourself. Everything will be explained step by step, in plain language, with practical guidance you can actually use. This information is especially important for older adults who may not use online banking often, who rely on direct deposit, or who have accounts they've used for many years without changes. The system around you may be changing, even if you haven't changed anything yourself. Let's start by understanding what people mean when they talk about new banking rules, because this phrase is often used loosely, and it causes unnecessary fear when it isn't explained properly. When people hear about new banking rules, they often assume that Congress passed a brand new law that directly targets Social Security recipients. In most cases, that is not what's happening. Instead, these changes usually come from updates to existing financial regulations, federal banking guidance, or internal bank policies that respond to government directives. Banks in the United States are required to follow federal rules designed to prevent fraud, money laundering, and identity theft. Over the last few years, fraud involving government payments has increased dramatically. Criminals have targeted Social Security numbers, stolen identities, and redirected benefit payments. In response, regulators have pressured banks to tighten verification, procedures, and monitor government deposits more closely. One major change involves how banks flag accounts that receive federal benefits. Social Security, disability, SSI, VA benefits, and certain pensions are clearly labelled as government payments when they arrive. Banks now use more advanced software to monitor patterns involving these deposits. If something looks unusual, even if it's not actually fraudulent, the system may automatically pause a transaction until it's reviewed. Another important change involves name matching and account ownership. Banks are under increasing pressure to ensure that the name on a Social Security record matches the name on the bank account receiving the funds. If there is a mismatch due to marriage, divorce, hyphenated names, or even simple spelling differences, this can trigger verification requests. In the past, these issues were often ignored. Today, they are more likely to be flagged. There are also changes related to how banks handle inactive accounts. If an account receives Social Security but shows very little activity otherwise, some banks may require periodic confirmation that the account holder is still alive and still authorized to receive payments. This does not mean benefits are being questioned, but it does mean more paperwork and more communication may be required. Additionally, banks are updating how they respond to government recovery requests. If the Social Security Administration later determines that an overpayment occurred, banks may be instructed to freeze or return funds more quickly than before. Even if you disagree with the overpayment determination, the bank often must comply before you have a chance to appeal. These banking changes are not designed to punish seniors or people with disabilities. However, the systems are automated, and automated systems do not always understand individual circumstances. That's why people who have done nothing wrong can still experience stress and confusion. Now that we understand what these banking rules involve, let's look specifically at how they affect Social Security and disability payments. Social Security payments are sent electronically to banks every month according to a strict schedule. The same is true for SSDI and SSI. Because these payments are predictable and recurring, banks treat them differently than irregular deposits, like paychecks or transfers from other individuals. With the new monitoring systems in place, banks may temporarily hold a deposit if they believe something about the account has changed. This can include a change of address on file, a new debit card request, an unusual withdrawal pattern, or even a failed login attempt on online banking. These events can happen for completely innocent reasons, but the system does not know that automatically. For example, if a beneficiary updates their address with Social Security but forgets to update it with their bank, the mismatch may cause a review. If a caregiver begins helping with finances and starts accessing the account more frequently, this can look unusual to automated systems. Even switching from paper statements to online statements can trigger internal reviews in some cases. SSI recipients may experience additional scrutiny because SSI is means tested. Banks are more cautious about account balances that fluctuate above certain thresholds. If an SSI recipient receives a one-time deposit, such as back pay, a tax refund, or even a gift from family, this can raise questions. While this does not automatically stop SSI, it can lead to temporary holds or requests for documentation. Disability beneficiaries may also face issues if they attempt to work part-time or receive short-term payments related to vocational programs. Banks are not evaluating eligibility, but they are reporting unusual deposit activity that may eventually be reviewed by government agencies. Another area of concern is joint accounts. Many seniors share accounts with spouses, adult children, or caregivers. While joint accounts are legal and common, they create complexity when government benefits are involved. Banks may need to confirm that the primary beneficiary still controls the funds and that deposits are not being diverted. All of this means that even though your benefit amount may not change, access to your money could be delayed if something triggers a review. That's why understanding these rules and preparing for them is so important. Next, let's talk about how stimulus payments and relief programs fit into this picture. Even when no new federal stimulus has been approved, the discussion of stimulus payments alone affects how banks operate. During previous stimulus rounds, banks were overwhelmed with deposits, account changes, and fraud attempts. Many institutions learned hard lessons and have since updated their systems. If a new stimulus payment is announced in the future, banks will likely place heightened monitoring on accounts that receive government benefits. This does not mean they expect you to commit fraud. It means they are trying to ensure payments go to the correct people and are not intercepted. Some seniors remember stimulus payments being delayed or misdirected during earlier rounds. In many cases, this happened because bank information was outdated or accounts were closed. New banking rules aim to prevent that, but they do so by adding verification steps that can slow things down. State-level relief payments and pension adjustments can also trigger scrutiny. If you receive a pension from a public employer, those payments are often tagged similarly to government benefits. Banks may review these deposits alongside Social Security, especially if they arrive close together. One important thing to understand is that banks do not decide who gets stimulus or benefits. They only process payments. However, when something looks unusual, they may freeze funds temporarily until clarification is provided. This can feel unfair, especially when you depend on that money for rent, food, or medication. This is why it's critical to keep your information consistent across agencies and institutions. Small mismatches that never mattered before can now cause problems. Let's now look at pensions more closely, because many seniors rely on both Social Security and pension income. Pensions are often paid through systems similar to Social Security, especially for public sector retirees. As banks update their procedures, pension payments are increasingly subject to the same monitoring rules. If you receive a pension and Social Security into the same account, the bank sees a pattern of government-linked deposits. While this is common and legitimate, it means your account is clearly categorized as a benefits account. That category comes with additional oversight. Changes such as switching banks, opening a new account, or updating direct deposit information are now more likely to trigger verification. In the past, a new account might receive payments without much scrutiny. Today, banks often want confirmation that the change was authorized by the beneficiary. If you are considering switching banks, it's important to coordinate the change carefully. Make sure your old account remains open until at least one successful payment is deposited into the new account. Closing an account too early can cause payments to bounce back, which leads to delays and extra reviews. Pension recipients should also be aware that lump sum payments, such as cost of living adjustments or retroactive increases, can look unusual to automated systems. These payments are legitimate, but they may still be flagged simply because they are larger than usual. Understanding this ahead of time can help you respond calmly and quickly if a bank contacts you for confirmation. The most important thing you can do is keep your information up to date and consistent. Make sure your name, address, and contact information match across Social Security, your bank, and any pension administrator. If you've had a name change, ensure all records reflect it. It's also wise to regularly review your bank statements, even if you don't use online banking. Look for any notices, messages, or small test deposits that could indicate a verification process is underway. If your bank contacts you, respond promptly and calmly. Ask exactly what information they need and how long the review will take. Keep records of any conversations, including dates and names. Consider having a backup plan. This might include a small emergency fund or knowing which family member or agency can help if a payment is delayed. While delays are usually temporary, having a plan reduces stress. Most importantly, do not panic if you hear alarming headlines. Many online claims exaggerate these changes. The reality is more nuanced, and most people continue receiving their benefits without interruption. Today, we covered a lot of important ground. We talked about what new banking rules really mean, how they affect Social Security, disability, pensions, and potential stimulus payments, and why banks are paying closer attention to government deposits. We also discussed what you can do to protect yourself and avoid unnecessary delays. The key takeaway is this: your benefits are not disappearing, but the systems that deliver them are changing. Staying informed, keeping your information consistent, and responding promptly to requests can make a big difference. This information matters because these payments are not just numbers on a screen. They pay for housing, food, medicine, and dignity. Understanding how the system works helps you stay in control and avoid surprises. If you found this explanation helpful, subscribing to the channel ensures you won't miss future updates that could affect your income and financial security. Thank you for taking the time to watch, and most importantly, thank you for taking steps to protect your future.